Hey, all right. So today I want to be covering some of the tips that we've received about how to approach venture capitalists and how to structure pitch decks in general. I've been in a number of really amazing talks via the Berkeley Blockchain Accelerator over the last several days. Honestly, like bordering on something like 10 hours of talks just over the last couple of days. And there's just really been incredibly amazing jam-packed information there. So I'll give you guys the short version of that. Also very excited to say that we are moving ahead with a merchandise store. We have a partner in Santa Cruz who's just like really amazing at building out brands' merchandising systems. And we're going to be having him build, a pretty great set of products there with kind of a variety of stuff. Independently from that, we're also still working towards dispensary partnerships, making physical collectible cards that then could be given away at dispensaries as a form of kind of almost like a loot box mechanic when you physically go there and get some stuff. So all that really exciting. I'll show you what we've been thinking about, what's been going on. I'm obviously still fixing bugs, still working on the game in the process. We've got a whole bunch of partnerships on the fly. I'm really pumped right now. It's like kind of like, almost can't even sleep levels of excitement. So aside from that, I still have to feed myself. Here's the 30-second kind of quick tip today for what I'm doing. I'm trying kind of an interesting experiment. Basically, what I'm doing is steaming this pile of vegetables. I've got here potatoes, asparagus, sweet potatoes, some carrots, and I've got water that's becoming infused with garlic. So when all this steams together, it's gonna make really delicious garlicky vegetables, which then I can use for the rest of the week. Or I can fry them up, make some delicious kind of stir fries, put some sauce on there, add some protein. Bam, meal completed. So I'm gonna do that real quick here in like 30 seconds. We're gonna fast forward through this, and then I'll get to the good stuff. All right, let's take a quick look in here. Smells bloody delicious. Yeah, that looks about right. So I actually made sushi rice, which is, rice with like vinegar, sugar, and salt. Sticky rice. Fried up these veggies. Can't wait to dig in. So let's take a quick look at the merch that we have going on here. I really love these shoes. I think it's a really great concept. And in general, if I have like one critique of the merch that we've designed so far is not enough Duncan's art, Like we use this older piece. We have a couple new pieces from Duncan as well. And I really want to make sure that these products are just generally so beautiful that people would want to have them regardless of the fact that they're our brand. So let's take a look here. So we got some shoes, we got phone cases with flower patch. Obviously we got to have the hoodie, t-shirts, important. We're definitely going to do a hat as well. You guys maybe have seen me with my flower patch hat. Another thing that Josh is really excited about is this idea of a sort of a deck case. It's a slip case. Josh and several of his friends are like actively practicing magicians, really amazing people who really are all about the art of astonishment. They do parties and venues and all sorts of stuff. So this magic deck or card deck really kind of fits into his vision. And then in addition to this, it's kind of a little bit child-proofed, so it's sort of like a weed container as well, which is kind of cool. So you could store your flower patch cards that you get from dispensaries in there. You can put some weed in there, keep it as a stash. People get their hands on it, they're not going to be exactly clear how to open it straight away. Kind of fun. Obviously shirts, some of these are a little bit more far out, like watches. This is a shower curtain design. I'm not sure about that one. But yeah, cool stuff. Definitely very excited about the trajectory of that, and looking forward to see what we actually come up with in the end. It's definitely going to be exciting for me, and I'm going to be kind of barely involved on the sidelines there. So it'll be very exciting as well. Okay, so aside from that, I want to get into the main topic about today, which is how do you pitch to venture capitalists? This is something that I've been studying. I'm not really sure if that's the direction we actively want to take. I really believe in organic growth, sustainability, kind of being our own masters in a sense. But, it could be that something that we need in the end. The world is very competitive. And in order to be able to stay competitive with a lot of these other projects like Axie and CryptoKitties and Gods Unchained, who have gigantic amounts of money at their disposal, we also may have to raise money at some point. It's a serious consideration, and it's important for me to know what's involved in that, how it needs to be approached correctly. So one of the talks that I listened to actually today was from Midges. He's a really, really amazing venture capitalist entrepreneur, professor at Berkeley, writer, and he's a very, very honest person who kind of gives it to you straight. Especially right now, we have this climate of the COVID-19 virus. So in particular, we have to be able to navigate the world that we're in. And the world is very different than what it was, just 4 months ago. So definitely, one of the first points is that VCs are much more picky. Right now, they are low on funds themselves. They're not sure which funds they have access to. They're not sure which funds have been recently lost by the people that they get funding from. And in general, it's not going to be very easy to raise money right now. Definitely projects that managed to raise money just very recently are in a much sort of safer position. But also on the other hand, he mentioned that since it is so much more difficult, a lot of the kind of casual entrepreneurs who weren't really that serious have dropped out. So in a sense, it reduces the size of the pool. Plus, people who live in the Silicon Valley here get a big advantage. Silicon Valley is the major investing capital of the world for tech. So being here, being able to go to parties and see people is generally a big advantage, but because we're all cooped up inside and doing Zoom calls, it's not as big of an advantage as it used to be. One other point that, very interesting, and I think a lot of people suspect this, but you will never get any VC funding unless you have a direct network connection to them. They receive, between 10 and 100 emails per day with pitch decks and photos. They mostly throw that out. They really want to see the personal connection. They want to see who you are. They want to meet you in person or on a call. And that's the only way that you can get it done. Another interesting kind of bit of insight is, VC firms, they're structured such that there's a lot of partners and juniors and all sorts of different stuff. Especially the junior venture capitalists, they a lot of the time are tasked with just finding out more about a particular market or industry. So they are likely to kind of make meetings with you just to find out more about the space that you're working at. And they might not actually be interested in your projects really at all. They're just kind of using you to study something. That's something to watch out for, and there's a lot of focus during the talk about how you need to keep pushing forward. You need to ask who the decision makers are. What is the next steps? This kind of thing. You need to be polite, obviously, and you need to be helpful, but at the same time, if you're not moving forward, then there's a good chance that you're just kind of wasting your time. So that was very, very interesting. Another very interesting part was that a lot of these venture capitalists don't really deal with small companies. This is more the arena of accelerators and sort of seed funding and angel funding. So a lot of the time, you really want to ask them like, hey, how small of a company are you working with? And for them, their definition of small is like if you're making $100,000 a year, that's like nothing. That's really, truly nothing. Another very interesting point there was that you don't actually want to give them all the information in emails or via like your starting kind of letter to them. You want to build intrigue. You want them to actually move to a face-to-face meeting. Because if you don't do that, then there's a good chance that they'll read your deck and go, oh, okay, well, whatever. And so they'll toss it. You have to build intrigue. I think that's the key phrase that I heard. Another very interesting thing was that you shouldn't start by directly approaching the VCs that you find most desirable. because a lot of the time you're going to need to refine your strategy or pitch. A lot of people are going to tell you no. 90% of the time, VCs do tell companies no, like by far. It's a very small percentage of the time that you actually get funding, probably even less than 10%, more like 5%. So basically, you're in for the long haul if you're doing VC stuff. You have to find some VCs, go pitch to them, make meetings with them, get network connections into them, get told no, ask them, why don't you want to invest in us? What can we do better? Like what is wrong here? That's what's very important to do, because on the one hand, it'll help you build a connection to that VC and show that you're adaptable. On the other hand, it'll also give you feedback. So when you go to other VCs and more desirable VCs potentially, you will know what not to do. I thought that was incredibly insightful, very, very helpful. Also, a lot of the time with VCs, you have a one-pager, just a one-page kind of sheet that explains the summary of what you're trying to do and why you're trying to raise money. Some mistakes that people make here is being way too technical, having an overcomplicated description of what they're trying to do. Really what you're trying to focus on is economics. You want to show that this market that you're invading and disrupting is a multi-billion-dollar market, because if it's not, that's just a waste of their time. They're never going to make their money back. And it's pretty useful to have a quick summary tagline, a catchphrase, so they easily remember the project. You know, something I haven't really thought about personally with Nugbase before. You know, somebody that I was talking to is kind of in the VC-ish, you know, association. He said, "Hey, this is Farmville for weed." And it's like, okay, well, you know, it's not exactly what we're building, but that is a tagline that somebody would remember. Also, never too early to start working with VCs. You don't want to go in there with a mentality of trying to sell them something until they want to buy it. You know, you want to recognize when they're interested, and that's when you can start moving to selling. But a lot of the time, if you buy them coffee, ask for advice, kind of hang out, talk about your industry, that sort of brings some value to them, and it builds a relationship over time. You know, they mentioned that psychologically with any person, the more you see somebody, the more you build a friendship, the more likely they are to become interested in you and eventually potentially invest. Also, waiting until you need money is a very bad strategy, because that makes you desperate, and then they realize that you're desperate, they're going to kind of give you a less good deal overall. Or they might not just be interested in because you're desperate. In meetings, it's very important that all the team members are represented, because really more than 50% of what you're doing when you're pitching to VCs is that you are proving that the team is capable of delivering, and that the team is full of geniuses that are too much of a good opportunity to pass up. It's so crucial that you come there and show that, you know, your personality, your dedication. I've heard stories from, I think, companies like Twitter, where, you know, they have like a visionary and they have like a person who's really good at grinding, just blasting through the work. You know, this kind of dynamic of team members, who they are, what their backgrounds are, all that's gigantically important, as well as obviously being kind and friendly and amicable to work with. In this climate of COVID also, it's very important to stress cash frugality. Like, obviously at Nugbase, we are outrageously frugal. You know, pretty much all the back-end services in business runs on less than $300 a month. So basically it's more about the team survival and less about any of that. And I think that's the kind of thing that really makes you stand out. You know, we're not burning thousands of dollars on having 3 different kinds of sushi every day. You know, we're really trying to make the best product that we can with the least amount of expenditure. And I think that's a good strategy for pretty much any business. Any business that goes on just like slamming money, obviously VCs are going to be pretty turned off about that. Overall, one of the biggest topics I think I've heard is, you know, venture capitalists, they're in the risk assessment and investing business, right? So any way that you can reduce risk is super, super crucial. There's a lot of different forms of risk, you know, such as the company failure, the entrepreneurs not being good enough, the market collapsing, the ecosystem collapsing, technological changes, cultural changes, regulatory changes. There's a lot of different risk factors. And basically, you're trying to make the VC feel so comfortable that this is a risk-free type of thing, definitely going to succeed, no way of failure, they need to get in now. Probably the fear of missing out is the biggest thing that drives these investing decisions at the end of the day. They want to feel like, yeah, we can't miss on this. We have to jump in now, especially if there's other VCs that are kind of also getting in. They think, okay, this group and team has been validated. We need to get in before it's too late. And I also asked specifically, like, okay, well, what do you do when you're working in cannabis and cryptocurrency, which are two very high-risk industries to begin with? You know, investors are also willing to take risks, especially if the payoff seems quite sizable. But the best strategy, it seems like I heard, was to come at it with a very bite-sized perspective. So you want to raise just a little bit of money, prove out the concept, raise a bit more money, prove out the concept, raise more money, prove out the concept. But kind of shockingly, the numbers that he was saying were like, raise 2 million, then 4 million, then 8 million, you know? So like when I think of bite size, I think like 200,000, but that's not how these like big Silicon Valley VCs think, you know? They're not really wasting their time generally with that kind of amount of money. Let's see here. Also very important to ask, how long does it typically take your firm to make a decision? Usually that's around 2 months. You kind of go in, do a bunch of meetings, progress through the hierarchy of various partners and juniors, find the decision makers, agree with them. 2 months on, they will write you the first check. You want to focus on forward progress the whole time. You know, you want to make sure you're moving through the ranks, you're standing out, you're continuing to impress. And, you know, another very important thing there was that a lot of these venture capitalists, they are ultimately thinking, okay, how am I going to make my money back? And the way that they can make their money back is generally fairly limited. You know, there is kind of like revenue sharing and dividends, which doesn't really factor into it. There's IPO, but, you know, from previous research, I know that just to do an IPO is like $100,000 in lawyer fees and like various legal fees, plus, you know, it's very hard. You have to be a gigantic company already. Small companies that do IPOs, they are, you know, penny stocks that people are very sketched out by. You can't really trade them. There's no climate for that. Anytime recently, it's very hard to do an IPO, even if you're a big company. So realistically, most of these companies exit via acquisition. This means that, you know, for example, as Nugbase, we would look to be acquired by, you know, Electronic Arts getting into the industry and saying like, hey, holy crap, you know, like we have to get into crypto gaming. It's super important. These guys are at the top of their game and can get acquired. In a sense, I think we're well set up for that kind of thing, but I'm personally not super interested in being acquired anytime soon. But that's part of the sales pitch. You know, that's how you approach VCs, that this is like risk reduction because you will get acquired because you're so desirable. And then the final point that I thought was very, very interesting is that, you know, right now we have this crisis, but the crisis will end. You know, maybe it'll be like 8 months, a year from now, we don't really know. But when the crisis ends, there will be a lot of pent-up demand for investing, a lot of pent-up demand for people making their money back, starting to do new ventures. You know, they've been cooped up and sort of bored. So expect that the VCs will act very swiftly. They're going to come out batting. They're going to try to get as much of the good deals that they've been missing out on. The companies that survived the COVID crisis are going to be very lean, very efficient. So there is somewhat likely to be a bit of a buying frenzy somewhere there in the year from now timescale. Okay, yeah, again, I want to summarize that, you know, my company, or our company, Nugbase, it's kind of still very small. You know, our revenues are tiny compared to what VCs will typically look at. So really what we're trying to go for, if we end up raising money in this traditional way, is more along the lines of either angel investors, small-time private investors, this kind of thing, you know, raise $250,000, something like that. I know that teams like, you know, Axie have raised over 2 million. Overall, to me, that's like also pretty scary, because when you raise that kind of money, there's a lot of expectations associated with it. So yeah, I don't think it's anytime soon. Plus, we have a lot of other options. You know, there's things like Kickstarter, obviously. There's things like doing our own sales or supporter packs, which is a very valid model pioneered by games like Path of Exile, Grinding Gear Games. They continuously use their own websites to rally supporter packs from their own people and give special rewards to those people. We are also ready, kind of, well, more or less any time to launch something called Start Engine. Not too long ago, there came upon a regulatory change, which is one of the big ways that things shake up, where called Reg CF. So for people doing an IPO, that's called Reg C. Reg CF is like kind of a joke in the sense that it's crowdfunding CF, and that allows a large group of investors to buy a very small amount of shares. So what Start Engine does is it facilitates a network of small-time investors buying out small shares of a startup. So in this way, you can, instead of having just like one or two big investors, you can have a whole bunch of small investors, which overall gives much more power to the founders. Okay, yeah, that was a lot. This is already kind of bordering on 20 minutes here in this section. So again, to summarize, not really trying to raise money right now, really aiming for sustainability, building our business, building our base, building our partners, merchandising, dispensaries, sustainability, making sure that our team survives the crisis that's ongoing. But, in the long term, I think this is very, very incredibly useful information that will serve me well. And I'm happy to be able to share it with you guys as well, because, who knows what's going to be in your future. And definitely getting into the mindset of what VCs are looking for and how to approach them, to me, sounds hugely, hugely valuable. Yeah, okay, so I'll catch you in the next video. There's some tech updates that I've done as well, but I won't get into that now. It's already super late. It's actually 4:20 a.m. just right now at this minute. So I'm going to wrap this up, publish this video, try to get to sleep pretty soon here, and yeah, catch you guys on Friday. Peace.